My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll do it, my friends. I'm just trying to make a little money. My job is not just to entertain, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Roaring job numbers. Not so roaring kitty. What can I say? This economy is creating jobs like there's no tomorrow. You'd think we've already had multiple rate cuts rather than none. And yet investors seem to think that the labor report didn't matter all that much, even as higher rates were right on its heels. I mean, the job growth almost seemed more reassuring than worrisome, which is why I think the average has barely got dinged. Dow slipping 87 points, S&P edging down 0.11%, NASDAQ declining 0.23%. Look, this one could have been a disaster, people, given how interest rates flew up on the news. It wasn't. Oh, and as for Roaring Kitty, you could tell that Wall Street turned up its nose in disdain. You knew they would do that. Yeah, Wall Street wanted some sort of real show. If you watch it, all I can say, sightseers, is you got what you pay for. So what's on tap for next week? Well, let's just go over here. Take a look. All right, look at this. Look at this Monday. It's an unbelievable day. It was supposed to be like in middle June. Nothing's supposed to be happening. No Sleepy Monday here. We have three important events for three of the biggest companies on Earth, and that's Apple, NVIDIA, and Lilly. Apple kicks off its annual Worldwide Developers Conference, and while it's rarely newsworthy, this time could be different because we might get some insight into what's going on for both the Vision Pro and the iPhone 16. Our goal is to figure out how many people are writing important programs for Apple products. I know it's a tad pedestrian for us consumers, which is why the conference rarely causes stocks to run. But because we keep hearing that Apple's behind on AI, maybe they show us something that shoots down that negative narrative. As for the Vision Pro, we need to see if developers are trying to do anything special with it. Otherwise, people will give up on the idea that it's anything more than a niche product. I think Vision Pro can still be used, especially when it comes to building complex structures, designing pretty much anything. My mantra has not changed. Own Apple. Don't trade it. As for NVIDIA, we're getting a 10-for-1 split. Yeah, my experience is when you get a 10-for-1, by the way, you tend to take people tend to take profits on a couple of them and let the rest run. So that's enough profit taking temporarily to overwhelm the buyers. So don't be down if NVIDIA gets hit on Monday after the split. It's just the psychology of the event. I'll keep 7, I'll sell 3. Own it, don't trade it. All right, now how about Eli Lilly? Very confusing story here. An FDA advisory panel will consider its Alzheimer's drug on Monday. I bet they'll be favorably disposed. Journalists have been writing and talking about this document that the FDA released yesterday about their Alzheimer's drug, saying that it presented a very narrow view of the drug's use. Total misread of the situation. The document said the drug looked to be safe and effective. I think that sounds pretty positive to me, so I expect good news from the panel. That said, we won't find out anything until the market closes. The panel's supposed to go till 5. Still, I have a positive read on the situation. I think this Alzheimer's drug could be huge if it gets approved, but nothing near term. Hey, by the way, we own Apple, NVIDIA, and Lilly for the Charitable Trust, so if you want more in-depth coverage, we're going to be covering wall to wall, as they say, for members of the CNBC Investing Club. Next, Oracle reports after the close on Tuesday. Let's call it a conundrum, all right? Because Oracle's spending billions of dollars to build out data centers, and Wall Street's reaction has been, let's say, schizophrenic. Last time they told a story of aggressive data center growth, and it was well received. Previous 2 quarters, they said the same thing, and it was poorly received. I think they can talk about going all out, and the stock will go higher. But we need to start rethinking about Oracle's $28 billion acquisition of Cerner 2 years ago. This electronic health records business hasn't been doing too well under Oracle. My sources say that Epic, a private competitor, is winning lots of business I know I was hoping it would go to Cerner. I am wary about any questions about Cerner on the conference call. Now, here's one that makes a ton of sense that doesn't usually pop up in the minds of New York and Wall Street people. Casey's General Store. Why this thing? I know it just sounds like another, like a 7-Eleven or something. Au contraire. It's got a secret weapon, a breakfast pizza that remains incredibly popular. Don't worry, it's eaten all day. But who doesn't want a bacon, egg, and cheese pizza for breakfast, or for lunch, or for dinner? I'm not kidding. It's been a home run for this 2,600 store chain that's in 17 states that most of the people in New York have never been to. Stock's been a total winner. Wednesday's huge. First, we get the consumer price index, and in light of today's report, I got to tell you, the CPI is probably going to come in way too hot, makes things tough for the Fed. Then we'll hear firsthand when Jay Powell speaks at the conclusion of the Fed meeting later on Wednesday. He's going to still do that ridiculous Q&A, too. I hate that. I know that we've had some brown shoots, and I've reported them on you. Those are signs of weakness to make it easier for the Fed to cut rates. But with this extremely strong employment number we got just this morning, I believe the Fed will have no choice but to leave rates higher for longer. That said, both the economy and the stock market have done well with the current regimen, so I'm pretty, I guess you could say I'm feeling pretty sanguine about higher for longer. I'd love a rate cut like you, but not at the expense of persistent inflation. And by the way, that's how you should feel. We want persistent inflation to be stopped. After close Wednesday, Broadcom reports ABGO, and I'm looking for a big number for this charitable trust holding. Now, Broadcom has a huge AI component, as their network equipment is essential for all these data centers, but they also have this other more prosaic aspect of its business, which is wireless. And that's just been doing okay. If the latter were improved, then this stock could just take off from here. Otherwise, Broadcom's a really good situation, but not a great situation because they still have this major part of their business that's just not doing that well. Okay, now, Thursday morning, we hear from Signet Jewelers, and the last time it reported, the stock got crushed, even though their numbers weren't even that bad at all. Then it came right back. That puts us on notice. If Signet gets hit again, we might want to buy it. I really like CEO Gina Drosos and what she's been building. If it gets hit like that, bring it in. At the close, oh boy, is this a tough one, Adobe reports. Now, we've got a highly unusual situation here, as the stock's down 22% for the year going into the quarter. Down. This is an amazing company. I think Adobe's got a problem, though, and that's competition from a design tool company it tried to buy called Figma. Adobe needs to protect its price points against Figma, which is a price cutter. But Figma's taking share because its software is so much less expensive. I know Adobe's so much more than just this one product line, but the Figma competition is what controls the narrative. It shouldn't. I say never count out Adobe. We also get results from RH, and that's the artist formerly known as Restoration Hardware. And last quarter seemed like a breakout after a prolonged period of disappointment. Stock shot up huge, but then it came down hard almost immediately. What will it take for RH to get out of this rut that it's in? As great as their products are, we know this business is levered to housing turnover, and we don't have much in this country. Probably the least we've ever had. I mean, I'm not kidding, in modern times. So my prediction, there won't be much upside for RH until the housing turnover number increases. Finally, on Friday, a firm hosts a fireside chat, and I bring this up because this buy now, pay later company, I think, is doing incredibly well. But it hasn't mattered to the stock lately because big institutional investors have no interest in financial technology when interest rates are so high and less wealthy consumers feel so cash-strapped. I think the stock should be going higher, but I know the big money guys can't get comfortable with it. A firm stays right here, no matter what they say. Wow. Bottom line, I'd be careful making a big move before the Fed meeting. We can't be sure if Jay Powell won't be more emphatic about leaving rates higher for longer, given this morning's hotter-than-expected jobs report. So next week, lots to chew on, but not enough to pull the trigger. Except for maybe that Lily. Anyway, John in Washington. John.
Booyah, Jimmy Chill.
Hey, how you doing?
I'm doing good. Jim, Rivian stock price has been fluctuating since its IPO. Where do you anticipating it heading in the next 6 months, let's say, towards the end of 2024?
Okay, Rivian needs to have... They need to find some way to get a lot of money in without causing too much dilution, and I don't know how they do that. But I've got to tell you that I think that the decision to not spend all that money in Georgia was a wise one, and I think that it's got popular enough cars that something can happen there. But right now, they need more money. Let's go to Robert in New York, please. Robert.
Hey, Jim, I just want to say, you know why your show is top in the country and around the world? It's only one reason. It's because you do your homework. And that's why you make everybody money. You do your homework.
Well, I try to make people money. You know, I make mistakes too, but thank you. You're very kind. Thank you for that.
Mistakes. You've given maybe a stock here that's been flat. That's not a mistake because I didn't lose. So you may make a mistake, but not too bad. I got to
thank you. That's very kind. That's very, very kind. Thank you.
Thank you, Jim. But you were very positive on this company on the morning of January 31st. And if everyone listened to you like I did on that day, they would be sitting on a return of over 28%. JP Morgan has this stock as an overweight at $650 a share. They have over 270 million, Jim, paid subscribers and building. And it's over $648 a share. It's Netflix. What do you think we should do?
Oh, I like Netflix very much. I'm just convinced that they know how to make the great products that we want for the least amount of money. That's what it's about. They've done it right. Other people just don't seem to understand how good that situation is. And by the way, just before we go into the rest of the show, I want to congratulate George Kurtz for CrowdStrike joining the S&P 500. That stock, which went out at 350, will be up substantially on Monday. All right, look, I'd be careful making a move before the Fed meeting because we're just not sure how emphatic Jay Powell will be about leaving rates higher for longer, given that red-hot jobs number that we got today. Well, man, buddy, tonight, Medtronic stock has had some mixed action since its earnings beat last month. I'm going to catch up with the CEO to see what's ahead for this healthcare name. Then, the maker of Uncrustables, dirt cheap, and Goldfish, I like the cheddar, both important this week. I'm seeing if you should keep some packaged food plays in your cart amid a questionable economic backdrop. And you called in on 2 small cap industrial stocks. I'm turning my homework, and I got to tell you, one of them, woo, really exciting. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.